All right, we will call this meeting of the Finance Committee to order. Could I get a roll call, please?
Robert Person.
Here.
Al Basso.
Here.
Kristen Robbie.
Here.
Joe Zitzelsberger.
Here.
Paul Cardarella.
Here.
Tom Wilson.
Here.
Sarah Whitley.
All right, and first item on here is the consent agenda, which only has the minutes. So I guess we probably don't have to pull that, but
Move to approve the minutes.
second. Motion and a second. Any other discussion? All those in favor, say aye.
Aye.
Opposed? And we've passed the minutes. On to public comment. Going to assume that you have a different reason to be here, so nothing for public comment. Anybody? Well, we're not doing live online, so that wouldn't be there. Then we're on to presentations, so we'll take a look at the audit.
So we have, we don't really need mics for the recording. So we have Justin here from Baker Tilly. So if you want to push the button till it turns green, I think you maybe used this system last year.
Just tap it.
Oh,
I tried to turn it.
it's got to be turned on underneath.
That was the first test.
Yeah. I can sleep. No, thank you, it'll stop flashing. Okay.
So he's going to give a summary of our audit findings and whatnot. And this is still in draft form if we find anything that we think needs changing.
Yes, thank you.
Go ahead.
Well, thanks for having me. As Renee said, I'm Justin Hoagland. I'm with Baker Tilly, one of the external auditors for the village. And similar to last year, before we issue your reports, your 2023 reports in final, we like to come kind of go over the draft reports, see if you have any questions for me, go over some financial highlights, which is on the screen here. And again, see if you have anything that you want to discuss. So, first, just wanted to thank Renee and her team. The audit went super smooth again this year, even smoother than last year, given that last year was the first year that we were on as your auditors. We did have 0 audit entries, meaning we didn't find anything that needed to be adjusted. That's very rare. I would say we have, maybe 5 to 10% of my clients have 0 audit entries. And a lot of those are large counties that have multiple CPAs on staff. So again, Renee does a great job. Why is that important? Is because you can, rely on your data in real time that it's accurate, and you can make informed decisions off that information. Unfortunately, there's a lot of municipalities out there, like I said, the 95 to 90% of other ones where we go in and we have to adjust their financials to make them accurate. So those budget to actual reports that other municipalities are getting likely have inaccuracies about them. So then you're making decisions off of a report that might not be accurate. And you don't have to worry about that here because your records are very clean and in order. I live in Waunakee, so I certainly like living in a place that I don't have to worry about if the books are not in order or what kind of decisions that are being made off of inaccurate information. So very important. And again, thanks to Renee for that. I believe we are tentatively scheduling to issue on June 27th after your debt issuance, I believe, if that's still the case. Yes, because of the timing of when we're getting the debt money into our bank account, which is on the 26th, Ellers requested that we not issue in final because the official statement is all based on the 2022 numbers because they weren't available until more recently. So that's why a bit of a delay this year in issuing. Yep. So, the first report I just wanted to briefly go over, it looks like this, called the Reporting and Insights from the 2023 Audit. This has a lot of information in it, a lot of non-financial information. It discusses what our responsibilities are as your auditors. It goes over any internal control deficiencies that we found during the audit, which the village has very good controls in place here. some other required communication that we need to give those charged with governance, the committee and board. And then it has my contact information as well. If you ever need to get a hold of me, feel free to email or call me at any point during the year. Next, the financial statements themselves. Maybe most importantly is on pages 1 through 3 is our opinion. And so we do issue what's called an unmodified or a clean opinion on your financial statements, which is the highest level of assurance that we can provide and similar to what the village has received in the past. So all good there. Next, I just wanted to go over some of the financial highlights from the year, which is on the screen here. So if you can scroll down to the first page. So, what's on the screen here is whenever I think about or try to assess the financial health of a municipality, I like to look at the general fund. This is the main operating fund of the village where a lot of the day-to-day transactions run through. And specifically, I like to look at the fund balance, or as what most people know it as, is the equity, right, that's built up over the years. And so your fund balance is broken down into 3 different buckets here. You can see the black is the 2022 amounts. This blue color is 2023. And so, again, you have 3 different buckets that's broken down into. At the bottom, you have your non-spendable fund balance. It's considered non-spendable because it's not in spendable form. I believe all of that relates to prepaids. So I'm assuming a lot of it's insurance, where you pay for your 2024 insurance in December of 2023. Accounting standards say we can't show it as an expense yet because the services haven't been provided, so it shows as a prepaid asset. But you've already spent it, so it's not in spendable form. So that's what that $341,000 is. Above that, you have your assigned fund balance. And so the village board can assign or unassign funds for various reasons. If you look on, I think it's page 47 through 48 of the financials, it'll break this down into much more detail, your various buckets of fund balance. And so again, you can assign funds for various future projects and activities and stuff like that. And so you have that 2.27 million of assigned fund balance. So above that's your unassigned fund balance. This is kind of what's left over and can be spent or not spent at the village's discretion. You will see the assigned fund balance did go up a lot from last year, about 560,000 or so. And that's because the general fund had a very good year and had a large net income during the year. So if you can just scroll down a little bit on this page, we'll talk about the summarized income statement here. So this is a very high level budget to actual of your general fund and how it did. You'll see the budget, you actually budgeted to use up about $1.2 million of your fund balance. But the actual results were that you had a net income of $356,000. So it did about $1.5 million better than budgeted in 2023.
Can I just add just a little bit to that? So that is the final budget. So if you remember in April, we met and we went over some of the budget amendments. So that wasn't what we had originally budgeted, but to cover some of the expenses that were over budget, we had to amend the budget. So I can't exactly remember what our original budget that we planned to use out of fund balance. I think it was closer to 600,000 or 800,000. So it looks high, but that's because we did those budget amendments. And one other thing I wanted to say on part of the variance, like in the unassigned fund balance, you might remember last year we had a huge unrealized loss on our investments. And so that was a big negative in the general fund, and that all turned around and then some in 2023. So that also helped make up some of that change.
You can keep going if you want.
Right.
That was
Stealing
exactly what I was
thunder.
going to say. As Renee said, your original budget was to use up about 561,000 of fund balance. And so pages 65 and 66 of your financials will break down, again, your budget to actual in more detail. as Renee said, a huge portion of why your revenues are higher than budget is because your investment income was, I think it was $346,000 better than budget, due to improved market conditions and, a really drastic increase in interest rates. We're seeing that at every municipality we go to. The general fund's doing really well because the investment income, was much higher than budget. So like a 1 year kind of kick, but probably not going forward. So moving on to the next page. So again, this focuses on the general fund's fund balance. One ratio we like to calculate is we take that unassigned fund balance that we just talked about, that stuff that's unrestricted, divided by your expenditures in the general fund, and it comes out with this ratio. So the red is what the villages calculates out to. The blue dots are other municipalities your size in Wisconsin. And so for 2023, that 30% is pretty much saying that, if the village didn't take in any more revenues, how long could you kind of keep paying the bills off that unassigned fund balance? And so that equates to about 3.5 months that you, again, could kind of keep the lights on if you didn't take in any more revenues. So you will see you're a little bit below kind of the average for other municipalities your size in Wisconsin. I will say that you do have a lot of assigned fund balance, however, that I think it was like 2 million something that we talked about on the last page. So you do a lot of assigning of money for future projects. I would say a lot more than what other municipalities would do. So a lot of that assigned fund balance could easily be considered unassigned, and your ratio would bump up. So it's not concerning at all that you're kind of below that average. You also do have a policy that states you're going to kind of keep that ratio that we calculated between 20 and 25%. So you're above that. So again, I'd rather be above it than below it for sure. And then moving on to the next page. So this page focuses on debt. Again, assessing the financial health municipality. I always like to see what their debt kind of load looks like. So this chart at the top, the black is your general obligation debt limit per state statutes. That's 5% of your equalized value. That's the maximum amount that you can take out of general obligation debt. So that's the black. The village, though, has a policy saying that you're not going to go over 50% of that limit. So that's what the green's calculating. And then that red is how much general obligation debt you actually have outstanding. So again, you're well below state statutes, well below the village policy. And it kind of calculates out to, at the top there, you've used up about 19% of your statutory debt limit. So again, you do have capacity to take out debt like you're doing to cover future projects as needed. So going on to the next page. Again, this focuses around debt. One ratio we like to calculate is seeing, what percentage of your normal routine expenses do you have to devote to pay off debt service? Because if you have to use it on debt service, you can't use it on another kind of village service. So in 2023, you spent about 23.7% of your expenditures went to pay off debt service, principal and interest payments. The black dots are other municipalities your size, so you're kind of right in line with kind of what percentage other municipalities are paying on debt as well. One other thing I wanted to kind of bring up is your ARPA funding. I think at the end of 2023, you still had about $290,000 of ARPA left to spend. I don't know if some of that's been spent in 2024.
Yeah, definitely, some has been spent already, and then at a recent board meeting, we talked about other usages and adopted a program that we're gonna do that's gonna use up most of the rest of it. We'll definitely make sure we get that all spent before December 31st.
Yeah.
But most all of it's been earmarked now at this point.
Perfect. Yep, that's what I was gonna say is it has to be at least obligated by December 31st, 2024. Obligated means you have to at least have a signed contract in place. You didn't just budget to use it in 25 or 26. Technically, you have until 2026 to spend it all, but it has to be obligated by the end of 2024. So you don't wanna not spend it and then somehow get a clawed back or something. Again, it can be spent on almost anything. Besides, you can't use it to pay off debt service, but, so yeah, just wanna make sure it's gonna get spent. So overall, again, audit went really smooth. The village is certainly in a, a good financial position, and, are there any questions for me?
Something that the auditors always seem to list about internal controls and not having enough people. Does that seem kind of standard for communities that are our size and there's, yeah.
Yeah, and so you have very good controls in place here, especially for a village. I think we only have one little point about Renee preparing some, most of the reconciliations at year end, and also being able to, do everything else. I would say a lot of other municipalities this size have more control points, like stuff around, payroll, accounts payable, wires, tax reconciliations, bank reconciliations. So if anything, the village is, I would say, much better controls in place than other municipalities your size. I mean, we have some municipalities that we have 2 pages worth of things that we list off just because they have 1 or 2 people that work in their finance and accounting department. You do have a lot more here
Right.
than that. So certainly not a concern here.
Good, that's what I wanted to hear.
Maybe as it relates to this graph here regarding 2020, what was the significant change from 20 to 21, and you see it normalize?
So, do you want me to guess? I can certainly guess
answer,
on
you
it.
can go
I
ahead.
wasn't the auditor, but I can guess that it was a refunding.
Yes, we did a refunding back then of some older debt, and so then the expense out, the payment out was huge that year. I could think we refunded like the 2011 and 2012 debt issues to save interest costs. So that was a blip because of that, but we got proceeds to pay that.
Yeah, pretty much accounting standards say we have to record the expense and the revenue, even though you're just switching one debt for another debt for lower interest rates. So I would say it's artificially inflated during that year due to refundings usually.
Maybe another question regarding the general fund graph that you had previous and the village's limits, the policy maximum. Kind of talking about the trends historically being around 30%. I mean, other audits that you review or put together, do you see the other municipalities or agencies around 25% for policy max?
I would say a lot of places don't have a policy.
Okay.
More than not don't have a policy. Most of them are in this range, or they'll have a range where they want to be at least 25%, but usually you see 25% somewhere in that range. I would say I do have, since you're, have been over consistently here for a couple years, I do have a couple municipalities that within their policy, they say anything over 25%, we're gonna assign for like future infrastructure projects. And so, again, it just kind of, at the end of the year, once the audit's close to being done, you know what your numbers are, you would assign, you do a calculation to assign whatever is over 25%. So each year you'd be at 25% for your unassigned, and you'd have this like infrastructure improvement fund set up for the other stuff, because you're probably going to use it for some sort of infrastructure in the future. I don't know, it just seems like something on paper though that people do just to, well, at least you're kind of assigning it for something. So that's one option. Again, it's much better to be over than.
Maybe as a committee, does it make sense to have the policy increase, the maximum increase at all, to justify what historically has been happening, or?
It's a good goal.
Okay.
I'm not opposed to discussing it, but just to prevent the definition of insanity, we had the same exact conversation last year.
Got
and
it.
We ended up not doing anything with it at a village board level, and I honestly, I wish I could remember the exact reasoning as to why we did nothing. Do either of you remember?
Either. I do.
Okay.
Yeah.
Renee, do you remember?
I don't even really remember where we landed. I remember having the discussion, and I think, yeah, I think there wasn't a strong feeling to change it from the policy that we have, knowing that we have historically been over.
For what it's worth, I 100% agree with you, because the banker in me says if it's outside of policy maximums for that long, then it should just become your policy. So, yeah.
So certainly something we can talk about.
So I remember the discussion because I was somewhat the impetus of that discussion. So the concern that I have, and first of all, let me back up. I thought the financial statements were fantastic. They're overwhelming to everybody, but as a reader, but I'm sure they meet all the things that got to be met, but they were just tremendous. I think this board should take a little bit of kudos. I think the village board takes a much higher kudos, and I think the staff should be congratulated on what they did. So very much appreciated, and I appreciate this graph. And more so the other two that were with it, in that it helped explain a little bit, probably a lot of it. But as someone who dealt a lot with analytics and statistics and all that kind of stuff, you're looking at one piece of information. And if I give you a nugget and a lot of stuff's around it, that nugget doesn't really mean anything, except it sets a precedence for everybody else. So for me, it's a little difficult to say, yeah, 30%. But from my perspective, there is a board policy of 20 to 25%, and this is what led to the discussion. There is a board policy at 20 to 25%, and the question is, are we overtaxing the residents? And that pretty much was the focus of where I was coming from. Is are we not budgeting correctly? And that's kind of a strong term, so I don't mean to imply that we're not. But I've heard the term a conservative budget, and maybe we got to get away from a conservative budget, more realistic budget. But for us to keep adding and adding and adding and adding, and I know inflation creeps in, I know the percentages, and there's a lot of other things that come into play, but we also look at the debt service, and you look at the 5-year layout in one of the footnotes, the debt service continues to get paid off. The last time the village issued any debt was in 1922. That was in the footnotes. So we're having debt service going down, we have the equity going up, and if I was to do an evaluation of the village, it's getting to, and I'm not sure at what point, it gets to be inefficient capital structure. If you're comparing it to a private enterprise, that you tend to get a little, it's always good to have in some type of recession, because corporations tighten their belts and get rid of all the fat and okay, what do we really need, and refocus their energies on what keeps the entity going. And a lot of things fall out in recessionary times. One of the things why all this is added, because the district, the village gets to a point of having a lot of cash, having a comfort zone, and that 30% is a comfort zone. It's a security blanket. So my question then, as it is now, is are we, and this is for a much bigger discussion, not at my level or this board's level, but at the big board level, is there overtaxing of the residents of Village Waunakee? That's where I was coming from.
Sally, you had a point of
Oh,
clarification?
well, one point of clarification, we did just issue debt now in 2024. So the way that Eller structures it with our capital plan, it drops down and then it goes back up to try and keep it somewhat steady. So we do have a new one coming on that would not be reflected in these financial statements. And then I was just going to say, too, I think when we had that discussion about the conservative budgeting, I think 2024 hopefully is a little bit more of a realistic budget. Not that, I think I did it a little less conservatively. I'm a conservative person by nature, but I think I tried to do it more realistically. We don't have, I don't have that information right now on where, we're tracking pretty good to budget, but I do think that the budget was, maybe not quite as conservative as it had been in the past. So
And
we'll
I
see.
respect that, Renee. And I'm not the guy at the front line that has to talk to the residents and citizens of the village of Waunakee and anybody else affected by this. But I guess that when I read this and I look at the equity continuing to grow every year, I see the debt service coming down all the way, added just new debt service. It just overall sends an impression on me that maybe there's something we need to look at.
Go ahead.
Okay, so last year we had this discussion, and I believe that there was a motion to recommend to the board that we could look at this. And I think the board said, no, we're good. So it never came back to us.
Right, that's true.
It just
We
didn't
had
come back.
initial discussions and then wanted to see how the board,
I mean, it's not on here for action, but we do have, some board members here that if this comes up, the audit comes up for its acceptance as something that probably could be talked about again. And I think Al and I both said last year, we'd be happy to look at this, the policy or what's happening here. And then the other thing is, like you said, Renee could just figure out how to allocate 5% of this and there's the problem solved,
I know Al brought
right?
that up
I mean,
too,
really.
right, you can just assign as much as you want.
You sign it for a future bonus for Todd or something like that,
That's called hocus
Like that
pocus.
from
accounting.
Yeah, but it would be easy to resolve, but it would be something that I think that our committee could look at and we could walk through, at least try to help out the village board a little bit if he wants to.
Yeah, and my point is that when it comes to the average Joe and Jane on the taxpayer coming in saying, hey, how do you justify this? That's where I'm coming from, is rationalizing to them that, hey, we're doing the right things. And I do believe we have a great staff in place, and I'm not convinced the 10 to 17.5 is the right statistics or population to use, because we're at about 17 now, which is at the higher end. That's okay. And I think we've gotten a much more sophisticated staff than perhaps a number of other folks in that 10 range, so there's a lot more to it. And that's why giving people a piece of information by itself doesn't tell me the story. So that's where I'm coming from on that.
Yeah, it's a great and prudent question to raise. I would say that I'm not a financial advisor or municipal advisor. One thing to consider if you do go down that route looking at it is levy limit and the levy limit statutes. Again, I'm not an expert in levy limit statutes, but I believe they're very hard to increase. Let me know if I'm wrong, Renee, right? If you decrease or decide not to
Right.
raise it, then you could be
But,
stuck.
but
to a point.
we're using some of our debt service cushion to help offset that, so.
Okay,
We would still not be lowering our levy limit threshold, even if we lowered our levy currently,
gotcha.
so.
Okay. Other thoughts? Go ahead.
So you identify in your, and Tom already, Mr. Wilson already touched upon it. And that is internal controls and the weakness that you identified in, and I understand all of that and what it means, and it doesn't bother me. But from an auditor standpoint, did you perform additional procedures around to verify that nothing was going on other than your materiality level, which is probably sky high?
Well, I can't discuss materiality levels. No, I'm just
It's a secret amongst
Yeah,
CPAs, I
secret,
know.
right? Yeah, very easy to calculate. No, I would say just our general audit procedures would cover any like deficiencies like that internal control that we talked about. So, I mean, all of our normal testing of, confirming balances with third parties, testing samples of invoices, various approval processes, walking through all of those. We do sufficiently and substantively test your balances, that would kind of cover that internal control deficiency and had no concerns in that area.
Ask you the same question I think I asked last year, just because I'm interested on the cutting edge of auditing services. I know you're not asked to audit ethics or culture or anything like that when you come in, but was there anything noticeable that everything was good?
No, everything was good. Yeah, people seem to like each other here, so that's always nice. It's not the same in other municipalities. So, no, it's great. I love coming here. So, yeah, no concerns like that or anything. Everyone was very forthcoming with information when we email, ask questions. No one's like, no, I'm not going to answer you and stuff like
Or
that.
like,
So,
I'll get back to you in 3 weeks?
yeah,
That-
everything was very prudent. Everyone that I talked to, so all good with that.
Okay, and then on the debt service to non-capital expenditures, it's been a long day, so my brain is broken a little bit, but on that one, our percentages compared to our peer municipalities, I mean, we could technically push that number down ourselves if we allocated more into non-capital expenditures, I'm assuming. If you're on page 5.
You're talking about this one?
Yeah, because it's as a percentage of our non-capital, so we could
Yep.
technically make that look artificially lower if we allocated more to non-capital expenditure.
Yeah, so why we kind of do this percentage compared to non-capital expenditures, is we want to kind of do it as a percentage of your normal routine expenses. Capital expenditures can vary greatly from year to year, depending on if you're doing giant road projects or you buy a fire truck that's $600,000. This number would be bouncing all around. So we try to get a more smooth number that's just based off, again, those kind of non-capital expenditures. So, I mean, your capital is what it is, depending on what you spend your money on. So there's certainly not necessarily a huge way where you could kind of artificially inflate or deflate it, depending on where you're coding those expenses. Because we would be like, why is this fire truck coded to general government when it's clearly a capital expenditure? So, but that's kind of why we use non-capital expenditures. It's a good question, though. I've never had someone
Well, 'cause I was just
actually
thinking-
point that out, that it's non-capital expenditures.
Well, because I was also thinking about it as an actual dollar expenditure versus showing it as a percentage, because I worry about ours being above peer, not monstrously so, but just the fact that we are consistently above peer. I wasn't sure if it was just the way that they assign or don't assign, their payments out versus their debt service, because we carry a very low amount of debt, so it seems strange to me that we are above our peers on debt service payment.
And just so I understand, that 21.3% is the median, so half of municipalities within this reference would have been above the 21 and half below?
Yeah,
That's
yeah.
median, okay.
Right, and we're in like the
Exactly.
top, or at least in the top
Do you know
half.
what the standard deviation and the average are?
I've never been asked that one either.
Statistician,
I-
sorry.
No, I don't know. I mean, it can't be super
We can
far off.
map it all, yeah. So,
Because you've used, I think you used like 19%, I think was the number of your statutory debt limit. I would say the average is between 20 to 30% that gets used.
okay.
So you're pretty close to what other municipalities have as far as your debt and how much you're paying in debt. Everyone has to kind of follow the accounting standards and how they're presenting capital expenditures versus other. There's some judgment, can this be a capital expenditure versus not, but in general, there's not that much kind of fudging that could go on with that.
Oh, no,
So
I
it's-
wouldn't think there's fudging. I was
Yeah.
just trying to understand why we're in a higher percentile compared to the median when we have less debt than
Yeah.
the median, so. It's like, do we have higher interest rates on our debt? I mean,
Either that, which I kind of doubt, given that you use Ellers and, right, to.
Right, and with
Make
our
sure you're
bond rating,
refunding,
because
right?
a lot of the reference communities would probably have a lower bond rating than us. But I'm just thinking that even though we have a fairly low debt load, there are some places smaller than us that have even less for their size. I just remember, I had a client around our size and they had no debt. They probably do now, but, when I was auditing, now it's been a while. But I think that some of those median, and as it was brought up, maybe we need to jump up into the next reference next year, as our population continues to grow, and maybe we'll see be more comparable to those.
Okay.
Yeah, I mean, I'd say one other factor that could come into play is the length of your debt outstanding. We have a lot of smaller places that might just do stuff with your local bank, and they might have 5 or 10-year debt, which a lot of bigger municipalities might do 20 to 30-year debt and actually go out for issuance using Ellers or someone like that, which is the opposite of what this calculates. You'd think it'd be the other way,
Yeah.
but that's one reason why you could be one way as far as your total debt and the other way as far as your debt service.
Okay.
Service
I'm-
payments, but again, it's a great observation.
Yeah, I'm sorry for getting really deep in the weeds. I was just genuinely curious.
The, two of the reasons why, it's an odd calculation, by the way. But two of the reasons we have an equipment reserve fund that we annually create, or ongoing amount that we expense every year, and that's not capital. And then we also have street improvement, that same thing. I'm suspecting that street and equipment, that reserve fund doesn't come into that or is a non-capital part of that calculation?
Those would both be capital type
Oh, they would, okay.
expenditures.
Okay.
But the equipment replacement we don't borrow for, but like the streets and some of the bigger projects we do. So that could throw it off a bit.
Yeah, and kind of like you're insinuating is, it is kind of, we try to at least do some sort of ratios for as a whole, but depending on what kind of services you provide as a municipality, because this is taking all governmental funds, not just your general fund of your normal routine expenditures. And, like your, the village center you have here that maybe another municipality won't have that could be skewing this, or stuff like that, that could really skew these numbers a little bit, but in general, you're kind of at least getting hey, here's where we sit compared to other municipalities. Just to make sure you're not way high or something that needs to be addressed.
Okay. Any
I
other?
have one final comment, and then I'm done, I promise. In your letter, your opinion, it says, "We are required to communicate with those charged with governance." Who are those charged with governance, from your perspective?
That's you. It's usually the village board finance committee is kind of those charged with governance that we would have to give that required communication to.
Okay, then what is the communication that we as a board should be receiving? I guess it's kind of a vague sentence, that's why I'm asking the question for clarity.
So a lot of it's in this reporting and insights from the 2023 audit. There's, again, if we had material entries, we're required to disclose it to those charged with governance. We don't have any entries, let alone material ones,
Right.
so it's not in there. There is, at the end of it, there's this two-way audit communications, couple pages that has a lot of that required communications that we need to kind of give those charged with governance that kind of explains multiple things. So a lot of the required communication is in this report per the standards.
Which for us is after the fact for the most part. So let me ask a little more, because, back in my younger years, when I wore younger men's clothes, I was an auditor. What happens if you disagree with Renee on something, or you find something? What do you do? What do you do with that disagreement? Where do you go?
Yeah, it depends, like what exactly it is, but we would go to those charged with governance with it.
That's what I'm asking the question.
There is even a specific communication that says, were there any disagreements with management? And there's a point in here that then we say, there were no disagreements with those charges with management. So there's even a specific point in here that says that. And if there was something, we'd have to put it in here, but we would communicate it before it went in here too.
I understand that. I'm asking, I guess, more of a, maybe not a hypothetical, but kind of hypothetical, in that who is the one charged with governance? If it's us, do you come to us if you find a disagreement? I know you didn't, but if you find us,
Yeah.
if you find a disagreement with Renee, or you find something awkward with Renee, do you go to Todd? So I'm just trying to find who is that you communicated to.
Yeah, again, depending on the severity and everything, it would probably first go to Todd unless it was Todd. that we were having the disagreement with, and then it would go to the village board, likely starting with the village president and going from there.
Okay,
But
thank you.
it would be, I think everyone would be abreast to whatever the issue was.
Yeah.
They do, in their process, they do make a management call to whoever's in my role, and kind of ask whether there's anything that, in my professional opinion, needs additional attention, from the auditor's perspective, anything that's caught my attention or have been of concern to me. That's done confidentially between the auditor and whoever the administrator is. I've never had, in those conversations, there's never been like, hey, Todd, I want to kind of ping something and see if you're aware of this. It's more been one way asking whether there's a concern that I have. But we've been fortunate in that nothing's risen up to that level.
First of all, Todd, in your response, are you hedging something? And second of all, I guess what I'm asking is, shouldn't the auditors know what that process should be if something were to be discovered? It may be just a procedural thing, but should there be a process in place that's, if something were found, in no disrespect to who's ever in the administrator's role, but there could be collusion, and should it be within the administration or should it be to someone else? I'm just giving you some direction as to what do you do when you find something?
It would be both for sure if it was severity enough that we needed to let the board know that there was something.
I would say if I were them, in my experience, I would pick the chief elected position or the appointed attorney on record for the community, one or both of those two individuals. And I don't know if maybe what you're suggesting that it should be a laid out policy for an auditor to follow, but
That's exactly what I'm saying.
that's what I would, I wouldn't fault an auditor for making those contacts if something looks drastically not right.
Because I have been faulted for going to the wrong person on something. You should have gone to this person. Well, I didn't know that. So
Was that defined in the engagement letter, though?
is the governance,
Yeah, because a lot of times when you engage with the firm, they generally lay that out in the engagement letter before you begin the process. And I don't know when we signed the
don't have
engagement
the
letter with
engagement
Baker Tilly.
yeah.
But generally you would put that in there, or now they put it in there, they lay all that out in the engagement so that your board is aware of who the contact is and who the appropriate contact is. So like if they have like an audit committee, it would go like to the chair of their audit committee, which may not be the chair of their board. So it might be like Joe is the chair of the finance committee instead of, or the village president.
And that's fine if that's the case.
I'm just saying, I haven't seen that, I don't know what the engagement states.
I don't think it has it that specifically. It
I don't believe
probably
so.
just speaks to those charged with governance, from what I remember of the engagement letter. I do think too, as part of the audit, did you talk to Kristen as the village president this year?
We
Or
certainly
is-
have in the past. I
Is
think
that
the
on a
first year we
rotating
did for sure.
basis?
Yeah,
Yeah,
this year we did.
at least on a rotating basis.
Yeah,
I have no concerns. So.
add a note to the
I would have
file.
reached out if I did, yeah, whether or not you reached out to me,
And
yeah.
I would expect that. I'm not expecting things to happen here. Just giving them a roadmap is all I'm asking.
We probably should occasionally review the engagement letter to identify the chain of communication so we can answer those easily, but I know
Yeah,
Tom, yeah.
That, in my experience in my previous life, it was always the auditor was gonna talk, was dealing with like a financial manager or treasurer, or whoever it might be. And then if there was an issue, it would always go to the administrator. And the administrator the ones that I dealt with, or me, would always call our village president with an auditor there to say, you know, maybe there was a procedure that wasn't quite followed here. It's gonna show up in the audit and I want you to know it. Or somebody was obtuse with you, with the auditor, which often happened, and that's gonna show up as well, that they disagreed with how the auditor was doing something. But that was usually the, kind of the way the way things went. But I don't remember anything being in an engagement letter, and then as the attorney, I would often get the call from either at the same room, right? They're all talking together, and then I would get the call. Do we have to worry about this? I'd say, well, it's gonna be in the audit, so just deal with it when it comes out, you know? But there you go, Al.
What do I know?
All right.
Thank you.
Any other thoughts, questions?
None? Thank you, guys. This is a lot of work to do an audit, to do all this work, and it's a lot of work to keep everything so well organized and running so smoothly that it goes smoothly. So, thank you.
Well, thanks to Justin and his team too, because it went smoothly up for us too. Can be a problem.
Yeah, they're fantastic.
The one thing that I guess I would note, there was several discussions about larger peer groups. And I think in future years, that is probably more useful. I mean, we may not want to abandon showing this, but maybe show that next tier up as well.
Yeah, if you want, I can have both of them next time, like both peer groups if you want, or just the next highest one, whatever you prefer.
Yeah.
I'll make a note to make sure we,
And personally, I would love to see the range rather than just the median.
oh, it's probably a huge range, probably like 0 to 100% on a lot of it.
And
but-
yeah, and I don't know if that data is even readily out there. I would assume probably, but
Yeah, we would have the range, yeah.
Yeah.
But yeah, it'd be some big ranges, because we would have some that are even negative percentages, unfortunately, but,
And
Yeah.
just because I'm used to the mean, median, and standard deviation all at once. I am. I know one thing when I see median, I know another thing when I see it in relation to the other two.
Yeah.
So,
well, and
Yeah.
true, I mean, honestly, maybe that one standard deviation would be
yeah.
more useful, but yeah, just as something that gives us a little more context to this.
Yep.
Correlation.
Oh, yeah. I would love that.
Yeah.
The kurtosis, we could look at the skewness of it all.
Nice.
What else can you do?
Excel can do a lot, so.
Let's go down that rabbit hole.
I'm gonna make a motion to accept the 2023 financial statements and reporting and insights from the 2023 audit report.
All right, motion by Robert. Do we have a second?
I'll second.
And second by Al. Any further discussion? All those in favor signify by saying aye.
Aye.
Opposed? And that motion carries.
Thank you, Justin.
Thank
Yeah,
you.
Thank you very much, Justin.
Should I turn this off?
Thank you, Renee.
Had to be stopped. We had to-
It's just-
Oh, that's
all
the
good.
fun part.
All right, on to the last item, discuss and take action on preliminary 2025 budget process and calendar.
It's the very last page.
Yep.
Sorry, Tom's correcting my agenda stuff, so I gotta fix it for next year.
I know.
I said 20, did I say the wrong year?
Everybody goes through that.
Yeah. Yep. I don't know if it's the fizziness of it.
But I did have a recommended motion. You did it correctly. I just didn't,
Oh,
I didn't have it correct in the agenda.
The
you
power.
have a power to make a motion just as
So
much as
there's
I do.
How did you get by with internal controls being the treasurer, the administrator?
He had a hard conversation with himself.
Always a conversation.
And you never lost.
All right,
Sorry, Joe.
no worries. All right, so on to the
Oh.
calendar.
Yes, the calendar, which I should have had that ready for Jared to bring up, but hopefully you guys took a look at it. It's not very different from last year. We're having this meeting tonight to just talk about that timeline. I will be sending out the capital and operating budget things, spreadsheets to the department heads shortly. They get about a month to turn those around. And then in August, we start to compile everything together and meet with, any village committees that may need to be involved preliminarily, like the Village Center Committee or something like that. In September, Todd and I meet and go over the preliminary things. He often gives me some thoughts, directions that he thinks we should move toward. Then October 21st is when we have the preliminary draft presented. And last year, I'll get your opinion on this, we did the joint meeting, I think maybe the past 2 years. And we did that mainly so the board members don't have to listen to the same thing twice, and everybody is kind of in the room together. If people are okay with that, we would plan on that again. And then it goes in the paper after that to meet our publication notices. We have the extra public comment or optional public hearing on November 4th, again, to take early feedback so that we have more time to process any citizen feedback that we might get rather than waiting till the required public hearing. Oh, thank you, Jared. And then November 18th would be the second meeting in November where we would have the formal public hearing at the board level and then look to adopt it that night so we can get everything to the county, the tax bills. There's a bit of a crunch at the end of November to get all that so we can get our tax bills in December and send those out. So any questions, feedback?
The only question I would have, Renee, is I know summers are very busy and falls are busy as well. From a finance committee calendaring is, what do we know with the finance committee as to when it's going to meet? Is there a way to pick dates so we can kind of get on the calendar?
21st of October.
So October
and the
21st would
18th
be.
Of November.
Yes. Last year, I think we had an August meeting because we had some other things to discuss and maybe I don't remember if we had an RFP that we went through. I think we talked about the assessor RFP at that one. And then we talked about some of the fund balance things and things that came up at this meeting last year. So at this point, I'm not planning for an August meeting. As we have had some years. So we would be looking for that preliminary one on October 21st.
Gotcha, thank you.
All right, any other questions? We'll need a motion.
I'll move approval of the budget calendar presented.
Thank you, Tom. We've got a motion. Any second?
Second.
And a second by Kristen. All those in favor signify by saying aye.
Aye.
Opposed? And that motion carries. And that leaves us with just one left.
I'll move we adjourn.
Second.
All those in favor, say aye.
Aye.
And we are adjourned.